Cathie Wood has everything to lose, despite having a relatively stable position and millions of wealth. However, she still decided to abandon her job to launch her own fund, ARK Invest, with a conviction stronger than you can fathom. At the time, it was a little business that didn't even have its own office. Welcome to the Investing Wise Academy, a channel where aspiring millionaires and billionaires can learn how to invest wisely. In this video, we'd like to share with you how Cathie crushed the S&P 500, became a celebrity within the financial space, and proved all of her doubters wrong. This is the story of Cathie Wood's rise to fame. If you're new to our channel, please subscribe to see more videos like this. Let's get started. On November 26, 1955, Cathie Wood was born in Los Angeles, California, and it was in this city that she established the foundation for a successful career in finance. Her parents had moved to the United States from Ireland, and they encouraged her to pursue any kind of work that she found interesting. Cathie, the eldest of her siblings and the first in her family to be born in the United States, had the responsibility of paving the way for her family's future. After receiving her high school diploma from an all-female Catholic high school in 1974, she went on to study economics and finance at the University of Southern California. She graduated with a double major. Cathie was the first person in her family to go to college, thus the success of her education was vital. As Cathie Wood stated,
having been born the child of immigrants in the United States, I was very fearful as I went into college that, I was the oldest and I had to carry the mantle for the family.
She was a student at the University of Southern California when she took a class where she met Arthur Laffer, the person who would forever alter the course of her life. Laffer is a well-known economist who is best known for his contributions to supply-side economics and the development of the Laffer curve, a well-known economic theory. Arthur Laffer assisted Cathie in landing her first position as an assistant economist at Capital Group, where she worked for 3 years. She began looking for work after receiving her summa cum laude from USC. Cathie was hired as a chief economist by Jennison Associates, an excellent position for a newly finished college student. This was a miracle since Jennison was entrusting important economic data to a 25-year-old. In the early 1980s, inflation was in the double digits, and productivity was at an all-time low. Inflation, according to two of the greatest economists of all time, Henry Kaufman and Milton Friedman, was here to stay for many years. Cathie Wood, a relatively fresh economist, believed that inflation had peaked. Nobody, predictably, believed her. Cathie explained in her own words, "For 4 years, nobody believed us. I would have to go up against Henry Kaufman one-on-one. I knew my numbers. I knew what I was talking about, but I had to convince them. I did it because of my youth." At the time, this was an audacious assertion to make, especially given Cathie's age. Spiros Segalas, the co-founder of Jennison with whom she worked, described Cathie's unshakable faith in her work. Of course, Cathie was correct in the end. After peaking at 13.5% in 1980, inflation fell to 3.2% by 1983. Cathie was placed in a nearby office by Segalas so that he could give her assignments on a regular basis. In retrospect, Segalas said that she was by far the sharpest. She always made me look good. The drop in interest rates, which coincided with a drop in inflation, paved the way for significant innovation. New goods were being released on a regular basis. In the 1980s, disposable cameras, personal computers, and DNA fingerprinting were all developed. During this period, Cathie made the decision to leave her position in economics and pursue a career in portfolio research. During 1985, she became an equity research analyst, and by 1990, she was managing her own portfolio. Her approach was completely out of the ordinary. She went there no one else had gone before. According to her, I was like a little dog looking for scraps under the table. While looking through stocks that nobody wanted, she realized that something big was coming. That was the start of the internet.
I was at a wonderful firm, Janison Associates at the time, who gave me the opportunity to do just that, except I had to find my own universe. So I had to scrap around. I often say I was like a little dog under the table, just picking up scraps. So what were those scraps? Well, database publishing came along, so that's Reuters and Telerate. And no analyst thought that that would be worthy of their attention. So I said, I'll do it. And what do you know? It evolved and evolved into the internet.
In the midst of the dot-com bubble, she and a co-worker started their own hedge fund, Tupelo Capital, in 1998. 3 years later, in 2001, she joined AllianceBernstein as a chief investment officer and thematic research strategist. During her time at AllianceBernstein, she was responsible for more than $5 billion. Her investment strategy was to look for interesting small-cap stocks with strong growth potential. The strategy was known as satellite. Disruptive opportunities were her preferred diversification strategy, rather than the same stocks everyone else was investing in. As a result, her investments were not linked to those of anyone else. To her clients' benefit, this allowed for increased profits while reducing total risk.
Historically, we did a study at AllianceBernstein showing this. If you slot a strategy in like that to a core portfolio, what you will do is increase returns and lower risk over time. That sounds counterintuitive, but it's true, because the correlation of our relative returns to traditional growth is very low. We're not in the indexes for the most part. And our correlation of relative returns to traditional value is negative.
Cathie, like many other successful CEOs, worked tirelessly to achieve her goals. Her former supervisor, Lisa Chalette, who is now Morgan Stanley's CIO, described her as a dedicated worker who works around the clock to ensure that a team gets the most comprehensive and unique perspective. Cathie had strong convictions, but her clients did not. Her portfolio was quite volatile, which caused numerous of her clients to be upset. Other institutions urged Cathie to add index funds to reduce the volatility, but she was adamantly opposed. She believed that investors overlooked innovation and wants to put a lot of money into it. These high-growth enterprises were selling at significant premiums in the private market compared to the public market. Cathie spotted an opportunity to profit from the public market's substantial price cuts. Cathie noted that public firms were occasionally selling for only 10% of what private markets were willing to pay. She saw a great chance there, she thought. Cathie noticed a massive property bubble in 2006, and she believed it was ready to burst. As a result, she drastically lowered risk in her investments, causing her to underperform the market by more than 10%.
In 2006, it was clear to us that something was very wrong. And so we pulled, and Mike, you will remember this, we pulled all the risk out of our portfolios in 2006. And the market went straight up on us.
Cathie, not surprisingly, thought her returns were embarrassing. Normally, she outperformed the market by taking on more risk. But this time, all of her clients were quite dissatisfied. She had underperformed the market once in a bull market.
I can tell you I was in a completely chaotic place in terms of faith. I thought I had faith, but the kinds of prayers, the panic that I had was I'd never been there before.
In response, she swiftly rebalanced her portfolio to recoup the 9% market outperformance she experienced in 2007. However, in 2008, the housing bubble burst. She had been previously warned about it. Unlike this time, she was unprepared. Her portfolio lost 45% during the course of a year, or 46.72% net of costs. This was distressing for Cathie and her clients, while the S&P 500 fell by only 37%. However, Cathie swiftly recovered and outperformed the S&P during the subsequent 2 years. Overall, from 2001 to 2011, Cathie beat the market by 17% or gross fees, which was neither the best nor the worst performance. Despite the fact that her returns were not poor, many investors abandoned her fund. As a result, her managed assets decreased from more than $4.4 billion in 2001 to less than $1 billion in 2011. Cathie recognized the need for change and innovation inside the financial sector. If she did not, institutions would continue to migrate towards index funds. In 2012, Cathie had the notion to revolutionize actively managed investment portfolios by converting them to an ETF system. However, when she proposed her plan to AllianceBernstein, everyone questioned its practicality. This encouraged her to launch her own company. Cathie founded ARK Invest, which was named after the Ark of the Covenant. Despite many skeptics, Cathie determined that she wanted to establish her own fund based on this concept. This initiated the ARK investment. There were no outside investors for the first 3 years of ARK Invest, forcing Cathie to cover all costs. Furthermore, there was no workplace, and everyone worked in public locations. It was a risky move to start such an unorthodox fund at the time. The CEO of ARK, one of the first employees, Tom Stott, stated there were a lot of people who doubted her and a lot of friends were concerned, yet her confidence never wavered. Cathie risked her personal wealth because she had a degree of conviction. I joined ARK purely because of Cathie. I was blown away by her vision. ARK Invest had a difficult time in its early years. Cathie's fund was in the bottom 25 of its peers, and she was obliged to sell minority shares in businesses and collaborate with other institutions to cover expenses. Two entities now possess 39% of ARK Invest, Nikko Asset Management and American Beacon. Not only that, but ARK Invest staff own approximately 10% of the company. Cathie was sowing the seeds of her fund deep in the soil of invention, despite her early mediocre performance. In 2015, she bought Bitcoin for $250 per coin and made early investments in Amazon and Tesla.
We think Amazon is a much bigger idea than people understand today. Its market cap is now approaching that of Walmart's. We think it's going to surpass Walmart because we think online sales, which are now less than 10% of sales, are going to grow much larger. Amazon is leading the charge. We think Tesla has its eye on the autonomous taxi market, and of course we know it's leading the charge in electric vehicles, so we're very excited about Tesla. Right now, the market cap, we'd call it network value of Bitcoin, is a little over $100 billion. So it's come up, it's come very fast, but it's at a fraction of Apple's valuation, of Amazon's valuation, and we think it's a much bigger idea than either one of those.
Cathie has totally destroyed the S&P 500. Today, Cathie manages over $46 billion through her 6 active ETFs: ARKK, ARKQ, ARKW, ARKG, ARKF, and ARKX. Many people said Cathie Wood didn't have enough experience, but her life shows that she wasn't an overnight success like many people think. She worked hard for many years to figure out how the economy as a whole affected individual stocks. This put her in a lot of debt in the investment world. However, with their unusual strategy and ETFs, she is now a well-known name in the investment world. Her religious faith in God helped her a lot through hard times along the whole journey.
So I was born with the gift of faith. I really do believe that. It has come very easily to me, though it has evolved and deepened over the years. When I went through the various crashes in the stock market, so the tech and telecom bust and the 2008-2009 meltdown, when I went through my divorce, I am divorced, each of those times was a time of deepening my faith. I never felt that God was leaving me or deserting me, I felt like I had to hold on a little tighter.
In the next 5 years, Cathie thinks the value of ARK Invest will triple, giving her investors huge returns. Forbes says that she is worth $250 million, which is based on an estimate that ARK Invest will be worth $500 million in October 2020. On the other hand, given that ARK Invest currently generates annual sales of at least $300 million, the company ought to be valued at a far greater amount than that. In addition to this, when you take into account the fact that Cathie most likely put her own money in ARK Invest linked stocks, it's possible that Cathie is worth $1 billion or more. So far, Cathie's life story has become legendary. She rose from being the first child in her family to attend college to becoming the well-known investor she is today. Despite the financial industry's naysayers, she continued to work hard and has proven that she is one of the leading investors today. That's all for today. Do you believe in Cathie Wood? What are your thoughts on investing in ARK Invest? Join the conversation in the comments section below. Please click the like and subscribe buttons if you enjoyed the video. We'll see you in the next video.